So let's talk about the more fun aspect of the trade when it goes in your favor, and that is the second type of exit. We spent a lot of time talking about the validity, the stop loss, the exit that we need but nobody likes. Let's talk about the exit that we all want but don't always get, and that is our profit target. So our entry was based upon support and resistance and price action. Our stop loss was based upon support and resistance and price action. So can you guess what we're going to use for our exit? Again, no percentages, no dollars, no fixed pips. Okay, we're talking about support and resistance. So as the prices are starting to come back down off the reversal, the sentiment shift of the 34-period exponential moving average on the low, this red line here, okay, and again, this white line was the 200-period simple. And again, you don't need this on the chart. I just sometimes have that 200-period simple on most of my charts because it's a very popular. Again, I don't think there's actually a study more popular than the 200-period simple on a daily. That indicator is probably the single most watched indicator time frame combination on earth in any market, that 200-period simple on the daily. 200-period simples have become popular enough where there is a certain amount of support and resistance they will offer even across intraday charts. So you will see that white line or that 200-period simple on some of my charts, just so you know. They're not needed necessarily, but they're certainly helpful from time to time. So as prices are coming back down, there's a few things that I would want you to take note of. Just as before we looked at Fibonacci and we looked at pivot points, or we looked at psychological levels or whatnot, we can look at all those things as well, but sometimes exits are much simpler than that, especially in a situation like this. Past resistance sitting at 35.35 has been fairly consistent. Let me show you with a horizontal level. Forget the low down here. Forget the low from this particular candle, okay, which was actually 35.20. We've been stalling in this area around 35.35 for some time. Look at what I would call this a near-term low. Look at near-term lows. Let the price action tell you, hey, this is where buyers have stepped in and supported price action. This is probably a pretty good place to park one of your profit target exits. I'm not counting pips here, my friends. I'm looking at where past price action has told me that there's been another sentiment shift. There's been, in this case, from bearish to at least neutral or bullish somewhat, because what is support? It's buyers. Buyers stepping in, supporting prices. What's resistance? Selling pressure. So buying support, selling pressure. If I've got buying support here, that's going to be an obstacle between me and lower prices. It's going to be an obstacle between my short and prices heading lower. So I have to respect these near-term lows. If we can break 35.35, this area right here, we might test this low down here at 35.20, which, by the way, is what? A minor psychological level. Okay, it's almost like rungs on a ladder or stepping down a flight of stairs here. If I can take out the minor psych level at 35.20, what's my next possible level? So why did I pick out 35.35? Price action's bounced here before. It's pretty obvious to see. This low down here happened to be near a psychological level. That's just another perk, but it was another near-term low. Beyond that, we have a couple interesting levels, and if we didn't pay attention to our market memory, we might have missed it. And I know a lot of you were asking me about it earlier. We talked about it. What about this gap down here? Okay, the high of this gap was 36. Let's see. I'm sorry, what am I talking about? 36. The high of this gap was, let's take a look here together. The high of this gap was 34.94. 34.94. That's the window that's going to want to be closed. 34.94. Is there another level that's pretty important in front of that? We got the psychological double zero, don't we? We never argue with those. So if I've got a 3,500 level, 00, big figure level, not going to argue with it. In fact, what I want to do is what I call step out in front of size. Big figures tend to have a lot of support or resistance depending upon the direction prices are coming up on them. Okay? So what I'm going to want to do in front of 3,500 is step out in front of size. In other words, rather than wait for prices to actually reach the support level of 3,500, I'm going to want to think about getting out at about 3,505. That's stepping out in front of size. All those orders are waiting at the 00? Fine. I'm going to get out 5 pips ahead. Okay? So that is if the trade continues to move in our favor, if it does. That's the big question. I don't know. Nobody knows. These are my contingent plans. The trade's going in my favor now, so I have the wonderful feeling of, okay, I get to manage this from the plus side. So again, what I want to do is negotiate through each one of these obstacles. It's an obstacle course, isn't it? Price action right now is going through one of those obstacle courses. There's an obstacle at 35.35. There's an obstacle at 35.20. There's another obstacle at 35.00. But because it's a big figure number, I don't want to be in line with everybody else. I'd rather get out before the prices bounce. And think about your ticket for a moment. I think a lot of people lose sight of this. Think about your order entry for a moment. Okay? When is 3,500 executable as a buy? Think about that for a moment. When is 35.00 executable as a buy? Think about the spread. What does your bid-ask have to look like? Prices actually have to break 3,500, go down to 34.95 as a sell to have a 3,500 00 buy, right? But to have a 3,500 by 35.05, that's executable. You understand? Does everyone follow? Think about the spread for a moment. Think about where price action has to go in order for you to actually get your fill. This is another point that is often lost on a lot of traders because it is a little trickier, but think about how the spread factors into your actual order execution. And the idea behind stepping in front of size is twofold. Number one, I don't want to be there with all those other orders waiting at the big figure, at that major psychological level. And I also got to think about the way I need to actually get my fill. Now, if we break the 00, great, no problem. But if we don't, what if we actually bounce off the 00? My executable order was going to be about 3 to 5 pips above it, right? Okay? So that is what we're looking at here. So profit targets, notice there wasn't just one. While there was only one point of validity in terms of where the trade is no longer valid, I had the option of what I call cheating in and finding an alternative resistance level to put my stop loss. Maybe it was the middle line of the wave. Maybe it was a near-term high plus 3 to 5 pips. Or maybe it was indeed the top line of the wave. Okay, but I knew exactly where my trade was no longer valid. Profit targets are a little bit different. I have a number of levels that I can look at as potential obstacles. Here's the bottom line. Nobody knows which one of these obstacles is eventually going to be the floor, where the euro-US dollar is then going to bounce up. Nobody knows. So I have to treat each one of these as the potential floor. And as we get there, negotiate each one of these. I don't know which one's going to eventually be the bouncing point. Now, there was a question about trailing stops. So let's talk about trailing stops here for a moment.